Hello, I'm Kelly O'Byrne and welcome to LCG's preview for the week ahead. I'll be talking to our Head of Research, Jasper Lawler, to discuss US corporate earnings, including Apple, Facebook and Tesla, a review of the ECB meeting, a preview of the Fed, Bank of Japan and Bank of England meetings this week, and Friday's non-farm payrolls release. So starting with corporate results, we are still in full swing of third quarter earnings seasons in the US, so we've picked out some highlights from over there as well as in Europe. We've Mondelez on Monday, Pfizer, Under Armour, MasterCard and Electronic Arts on Tuesday, Molson Coors, Groupon, Qualcomm, GoPro, Tesla, Yelp, Facebook and Kraft Heinz on Wednesday, Dow DuPont, Yum Brands, Ralph Lauren, Starbucks and of course Apple on Thursday. Then we finish with Berkshire Hathaway, HSBC, Ryanair, BNP Paribas, Credit Suisse, BT, BP and Royal Dutch Shell and Ferrari on Friday. Moving on to economic calendar. On Monday it's US personal spending and core PCE inflation. On Tuesday, the Bank of Japan rate decision and European GDF and CPI. On Wednesday, China Caixin PMI, US ADP employment, ISM manufacturing and the Federal Reserve rates meeting. On Thursday, it's the Bank of England monetary policy decision and quarterly inflation report. And finally, China Caixin services PMI and non-farm payrolls on Friday. So Jasper, it's a fairly busy week ahead. We've got US earnings. Talk me through that.
Well, there's so many earnings coming out. We're still in the heart of earnings season. We can't obviously talk about all of them. I think the three probably most interesting ones from the sakes that they normally move a lot on earnings and they've been market leaders and they're companies that we all engage with quite regularly is Facebook, Apple and Tesla. I can't say I own a Tesla yet, one day. But well, we may as well start with Tesla. It just seems like the shares have been doing very well, but we're kind of hitting some kind of support levels at the moment just because there's a sense that actually production's not where it needs to be, particularly with the Model 3, which is their mass production vehicle. And so they need to take advantage of this positive environment that they have at the moment where all these governments are coming out and saying that we're going to end petrol and diesel cars by 2030, 2040. They need to raise their head and be top of the game for the mass-produced vehicles as well as luxury. But at the moment, it just seems like some of the big automakers are going to catch up. And so that reduces their long-term scope for risk, for growth. And, in the meantime, their earnings are pretty lackluster. So maybe that's going to weigh on the reaction to earnings. Facebook, again, kind of looking at the longer term picture, I think they're kind of just running out of space to put the adverts in Facebook. They've obviously still got Instagram and WhatsApp where they can kind of put some add to the ad load there. But eventually, Facebook has to transition from a high growth stock where they can just pile on more and more adverts per user to more of a value company because user growth is going to plateau and the amount of ads they can put on the platforms are going to plateau too. So that's just something I have to face up to. We just haven't quite got there yet. I expect these sets of results, they have a good history of beating, so I would imagine they do again. It's just a matter of whether even just that beat of those earnings is going to be enough. Apple, obviously the big one. Electricity jumping out here. Apple, the big one, and then again, it's probably the fact that these earnings are going to be a little bit more coloured by the fact that the iPhone X shipments for Christmas have not been where they need to be. So I've heard rumours that they're half the numbers previously expected. So it's not so much about this quarter, but it's just looking forward to the big game changer model may not be able to deliver on the kind of revenue growth that investors were looking for in the next couple of quarters.
Right, okay. And now 3 out of the big 4 central banks are making rate decisions this week. But before that, can we just jump back to the ECB decision already made? What implications does it have there?
Yeah, absolutely. Basically they did what the consensus was, and the consensus was quite broadly felt across economists and analysts because basically it was leaked by ECB sources beforehand. So they did what was expected, which was cut the purchases down to 30 billion a month, extend the asset purchase program by 9 months. So it'll end in September next year, unless it gets extended again by, again, a smaller amount. It wasn't enough to send the euro higher, and actually some of the indices rallied on that euro weakness. I think basically just because for the euro to really get a footing above 120, we need some idea that that negative rates are ending, and we just don't quite have that yet. They said that the negative rates, they'd look at raising rates rather well past the end of QE. So that kind of puts a bit of a lid on the euro, and maybe 120 is the top for the time being.
Yeah, of course. And so now run us through the meetings this week.
Yeah, so the other top 3 central banks, we've got the Bank of Japan first. It's the first Bank of Japan meeting since the election in Japan. Obviously, Abe basically won through, and that was a kind of vindication that the Japanese generally support his policy, which involves the QE. So that opens the door to more QE going forward. It would be a surprise to me if they decided to up the ante on the programme. And it'd be surprising if they cut back the programme so soon after an election, which kind of vindicated it. So I'd expect no change probably with the Bank of Japan. And if we're looking at dollar-yen, it's probably strengthened the dollar, which is going to be the more contributing factor to where that currency goes. And it looks like it's breaking higher at the moment. We've obviously got Bank of England. That could be the most exciting of them all because we're looking at our first rate hike in over 10 years. I think the rate hike does happen. But probably the biggest consideration for how the pound moves in reaction to this meeting will be the number of dissenters. It's probably not going to be a consensus move. And if it seems like actually this is just going to be a one and done, and actually, for example, those soft retail sales numbers that we got, the worst since 2008, are beginning to concern the Bank of England, then I think there's actually scope for a negative reaction to this news, even though it means higher rates in the UK. And then the Fed, it looks like they're going to hike rates in December. So this is kind of a pause meeting, if you like. And it's still inflation's a bit lackluster, so they're not going to feel like in any desperate need. And obviously, there seems like the Trump tax plan is making some ground at the moment. So maybe by December they'll have a better feeling as to where fiscal policy is going in order for them to work out monetary policy.
Yeah. Thanks. And non-farm payrolls on Friday, what are you expecting?
So the consensus is 308,000 jobs added. So if you remember, that comes off the back of minus 33,000 last month. So we may even get some downward revisions to that minus 33. So that'll be interesting to watch. But all of this is just a bit in the context of the hurricanes. So it was interesting last month they said that the jobs growth was affected by the hurricanes, but actually the unemployment rate wasn't. So the unemployment rate actually dropped, seemingly unaffected by the hurricanes. So this is basically a catch-up month. So last month was unreasonably bad. This month unreasonably good to make up for the hiring that couldn't take place last month because of the disruption. So it's a bit hard to read into it. And so I think the net result is that whatever path the dollar was on, overall, these numbers are not going to massively affect it. Obviously, if they're expecting a big number, so if it comes down to being a really disappointing number, then something maybe a sub 100,000, then I think it actually could affect whether we get that rate hike in December. But I think that's probably just not that likely.
Okay, thanks, Jasper, and thank you for watching. If you wish to get these videos and more as they're released, please follow LCG on social media.